Most people have no idea what XRP actually is, or what its true value represents. They think it's just another crypto with a price chart, a market cap, and a community of believers. But according to a former liquidity systems analyst from the Bank for International Settlements, that view is years out of date. Because XRP is not being valued based on what it does, it's being valued based on what people think it is. And that misunderstanding has kept the entire market blind to what XRP is really built for. Before we go deeper, hit like so more XRP holders get the truth about what's happening behind the scenes. Subscribe so you stay ahead of the next major shift. And drop a comment telling me how long you've been holding XRP. And as always, this is informational only, not financial advice. Markets move fast, and you must make your own decisions. Right now, as I'm recording this, XRP is trading in the low double-digit cent range. Quiet, overlooked, and dismissed by people who think price equals truth. But if you ask the BIS analyst, he'll tell you the opposite. He said price is the least accurate indicator of XRP's real role, because XRP isn't designed to reflect speculation. It's designed to reflect the flow of global liquidity. This was the first thing he said that completely shifts your perspective. If you own gold, bonds, stocks, or US dollars, you're already operating inside the system XRP was designed to enhance. Think about that. XRP isn't an outsider. It's an upgrade layer built on top of the existing financial world, the world everyone is already participating in, whether they know it or not. He explained that every major asset class today, gold reserves, government bonds, equities, and currencies, all rely on cross-border settlement rails that were built decades ago. Slow, expensive, fragmented rails that create friction every single day. Friction that costs banks billions, slows liquidity movement, and keeps the financial world operating on outdated timelines. And XRP's value doesn't come from hype. It comes from eliminating that friction. That's the part almost everyone misses. They look at XRP like a coin. Institutions look at XRP like infrastructure. Retail asks, why isn't it moving? The BIS analyst asks, do you understand the global liquidity problem it's designed to solve? Those are two entirely different questions, and they lead to two completely different valuations. Here's your retention spike, because what he said next is the moment that changes everything. He explained that XRP isn't priced according to what it will do. It's priced according to a system that doesn't use it yet. Once corridors are activated at scale, once tokenized assets need real-time settlement, once CBDCs need a neutral bridge, XRP stops being a speculative asset and becomes a required tool. And tools are not priced like tokens. Tools are priced based on necessity. He said, XRP's value today reflects the world before modernization. Its true value will reflect the world after modernization. That's the line retail investors never hear. Because most people think price comes from community faith. But in reality, price comes from utility, liquidity corridors, and settlement demand. And we haven't even entered that phase yet. The BIS analyst broke down why people misunderstand XRP so badly. They treat it like traditional assets, where market caps are linear and price movement follows inflows. But XRP operates inside a liquidity system where flow is multiplied, not matched, where small amounts of capital can move price disproportionately because the system is built on settlement depth, not speculation. This means XRP is designed for speed, compression, and scaling, not for slow, fundamental valuation models like stocks or commodities. And because most people don't understand that, they completely misjudge its potential. He said the most important truth is this: XRP's purpose defines its value, not its price history. And once you understand the purpose, the price you see on the screen stops making sense. It becomes obvious that the market is valuing XRP as the asset of the old system, not the new one. And that disconnect is temporary. That's the heart of this video. That's the misunderstanding. That's why most people have no idea what XRP is worth, because they're valuing it like a chart, not like a solution. And now that we've set the stage, we can finally reveal what the BIS analyst said about XRP's real valuation framework and how it ties into gold, bonds, liquidity cycles, and global settlement. The BIS analyst said that if you want to understand XRP's true value, you have to stop thinking in terms of crypto pricing and start thinking in terms of global liquidity architecture. Because XRP isn't designed to compete with other crypto assets. It's designed to solve a structural problem in the traditional financial system, a problem so deep that most people don't even know it exists. He explained that every single day, trillions of dollars in value move around the world through a settlement network that was never built to handle the digital age. When a bank sends money internationally, there's no unified system coordinating those flows. Instead, there are fragmented liquidity pools, nostro accounts, pre-funded balances, time delays, and slippage, all of which drain global liquidity. This is the heart of the problem. This is where the friction lives. And this is exactly where XRP's real value begins. He said XRP's purpose is to remove the need for trapped liquidity, the same trapped liquidity holding billions inside correspondent banking networks worldwide. These balances don't generate returns. They don't move. They don't contribute to the economy. They sit there, waiting to be used because the system can't settle fast enough. Now, here's the part almost nobody understands. If XRP eliminates even a fraction of that friction, the amount of liquidity freed from the old system is far larger than XRP's entire market cap. That's the value mismatch. That's why XRP's price today is meaningless, because the world is valuing XRP based on speculation, not based on the liquidity it will unlock. The BIS analyst said something that flips the entire conversation upside down. Assets aren't valued by what they cost. They're valued by the system they support. Gold is valuable because it anchors global reserves. Bonds are valuable because they anchor government finance. Fiat is valuable because it anchors daily commerce. XRP will be valuable because it anchors real-time settlement. He said to imagine XRP not as a token, but as a lubricant, a conductor, a bridge between liquidity pools that can't talk to each other today. When you evaluate XRP through that lens, price stops being tied to market cap and starts being tied to flow capacity, the amount of global value that must pass through it. That's why the idea of XRP needing $1 trillion of inflow to reach high prices is fundamentally wrong. Because XRP won't be priced based on inflows. It will be priced based on the global settlement demand it absorbs. This is where the multiplier effect suddenly makes perfect sense. It's not magic. It's not hype. It's liquidity physics. He explained that assets with low float and high flow requirements always revalue suddenly, not gradually. Because once demand exceeds available supply, price has no choice but to adjust instantly to meet flow requirements. That's why a few $1 million can move XRP several cents. That's why thin order books react violently. That's why market cap jumps don't require equivalent inflows. But here's the part that ties everything together. XRP's value cannot be measured by what it is, only by what it connects. And what it connects is bigger than crypto, bigger than the market cap charts, bigger than any retail speculation. It connects gold settlement, FX liquidity, bond flows, tokenized assets, CBDC rails, cross-border remittances, and global banking infrastructure. When you value XRP based on that system, the system it was designed to serve, the price you see today stops making sense. The market hasn't priced the future system yet. It's still pricing the old one. That's why the analyst said XRP is fundamentally misunderstood, because its value doesn't come from scarcity or speculation. It comes from the size of the liquidity problem it was built to solve. And that problem measures in the trillions. Retail looks at the chart. Institutions look at the rails. The chart reflects the present. The rails reflect the future. And those two worlds haven't met yet, but they will. And when they do, XRP won't be revalued because of hype. It will be revalued because the system will require it to function at a new scale. Now that you understand the hidden valuation framework, we can move into what the BIS analyst said next. The part that reveals why institutions are already preparing for the moment the world flips into real-time liquidity. The BIS analyst said the biggest mistake retail investors make is assuming they'll be warned before a global shift happens. But in finance, the shifts that matter never show up on the news first. They show up in architecture, in plumbing, in the silent movements of liquidity before the world even recognizes what changed. That's why institutions are already preparing for XRP's future, while retail argues about its present. They see the rails forming. They see tokenization scaling. They see CBDCs testing interoperability. They see liquidity corridors being wired into regions that have been preparing for real-time settlement for years. These are not theories. These are systems. Systems that only need a single ignition point for the world to realize the truth. XRP has been mispriced from the very beginning. And the analyst said something that stayed with me long after the conversation ended. True value doesn't appear gradually. It appears all at once, the moment the world finally needs the thing it ignored. That is XRP's destiny. Not to follow hype, not to mirror Bitcoin, not to be just another speculative chart, but to become the connective tissue of a global financial system that has already outgrown its rails. When that moment arrives, whether it's triggered by an ETF, a liquidity squeeze, a CBDC rollout, a cross-border collapse, or a tokenized asset explosion, XRP will not rise because people suddenly believe in it. It will rise because the system will require it. And when systems require something, the revaluation is never polite. It's abrupt. It's sharp. It's permanent. Here's the truth nobody tells you. The world doesn't reward the loud. It rewards the prepared. And if you're here right now, still watching this, still learning, still seeing what most people can't see yet, then you're already ahead of the curve. You're already positioning yourself in a story the world hasn't caught up to. You're not waiting for approval. You're observing the architecture underneath the noise. The architecture that will determine the next era of global liquidity. That's why I built Matrix Millionaire. Not to hype charts, not to chase headlines, but to give you the perspective the market refuses to offer. The perspective that comes from understanding systems, not speculation. So if this opened your eyes, if something finally clicked, if you feel that shift inside your chest where confusion turns into clarity, do one thing for me right now. Tap like, so this message reaches more XRP holders who deserve to understand what's really happening. Subscribe so you stay ahead of the moments the world won't see coming until they're already underway. And drop a comment sharing one word that sums up what XRP's true value now means to you. Not because I need the engagement, but because we're building a community of people who actually get it. People who think differently. People who see through the fog. People preparing for the future, not reacting to the past. This is Matrix Millionaire. This is your moment of clarity, and XRP's true value is just beginning to surface.